I guess my biggest message is mostly you want to avoid. All right, welcome to Talking Investing. I am Tom, and as always, this is not financial advice. Today, I want to do a video on the stock market. The stock market is having another bad day, and there's a lot of panic out there. So I want to take a step back and take a time out and talk about what's going on in the marketplace. So if you're new to the channel, we'd appreciate it if you would subscribe and, of course, hit the notification bell. And everybody, of course, please smash the like button. It helps the channel a lot, and it helps get this video out to more people. So let's talk about the stock market. I really want to slow it down and just talk about what's going on today, because a lot of people are probably panicking and they're making decisions in a state of panic, which is never a good thing. So the first thing I want to do is just run down what's happening in the market. The S&P 500 is down 2.67%. The Dow is down 1.75%. The NASDAQ is down 3.58% right now. The Russell is down 3.45% right now. The NASDAQ and the Russell in particular have taken out their 52-week lows. They are deep into bear market territory. The Dow and the S&P are in correction territory. The Dow tends to be the most stable out of everything. However, it's only 30 stocks, so I don't pay much attention to it. In addition to that, the cryptocurrencies are getting beat up today. Bitcoin just took out its 2022 lows, and it's just an across-the-board very, very rough day, particularly in the small-cap high-growth sector, which has already been beaten up severely more than all of the rest of the market. So I want to go through a few charts. I want to show you a few of my watch lists, and I want to talk about what people are doing, and I want to tell you what my strategy is on how I'm dealing with this, because nobody is having a good day today. So whoever you watch on YouTube or wherever else you're getting your news or your information, those people are feeling the exact same way you are. I'm here to tell you. So that's why I wanted to take this time out and just talk strategy, because today these are the types of times that we can make big mistakes. The first big mistake that people make is panic sell. There's almost no sector that is safe, so there's a lot of stocks that are crashing, and we'll take a look at a few of those. So one of the big mistakes people make on a day like today is to panic sell. The other one is the opposite. A lot of people panic buy. They see things at prices they never thought they would see them at new historic lows. They've done their due diligence and they know their fundamentals, and they're looking at these prices thinking, I'm never going to get this opportunity again. Well, the thing is, we don't know when the bottom is. So you may be right. It may be today, but it's probably not. And if you're guessing, that can be a big mistake. So, just like panic selling at the bottom of the market, you also don't want to panic buy and go all in on any one given day. This is a serious bear market, and it does not look like we're at the bottom quite yet. It does look to me like we're getting near a bottom, but it doesn't look like we're at the bottom. And again, I don't know when we're going to be at the bottom either. So this is why I'm trying to call a timeout and just have people be reflective a little bit. And right now is a time for caution. What I am doing is dollar cost averaging in. So again, this is not financial advice. You don't have to do what I'm doing, but I am slowly dollar cost averaging into the stocks that I have the absolute strongest conviction in. So let's take an actual look at the charts. So today we took out our 52-week low on the S&P 500. You're going to see this is a theme across all the indexes. So from our all-time high at the beginning of January of 2022 until where we're trading right now, we're down about 16.5%. So we are approaching bear market material. We're deep into correction on the S&P 500, and this is the broadest measure of the market. So this is the one most people rely on. Actually, retail investors, their portfolios tend to mirror more either the NASDAQ and or the Russell 2000. So we're going to take a look at those two, because those are much more a reflection of most retail investors' accounts. So I don't know what you're invested in. You'll know which one you measure up with the best, but even the S&P 500, which is the broadest one, is approaching bear market territory, and it feels like it's already there. This is a chart for the NASDAQ. This is on a one-day time frame, just like the last one. So each one of these candles represents one day. From top to bottom, the NASDAQ topped out at its all-time high back in November. We are now down just about 28%, so that is well into bear market territory. Friday was our 52-week low, and today we've gapped down again. So this has been a very tough run. We're deep in a bear market. Okay, so this is the RSI for the NASDAQ on the one-day time frame. So you'll see anything under 30 tends to be oversold. So you will see in this 52-week period, we've only been oversold one time, and that was in January. And if you remember, we had this vicious rundown in January, and we touched this line right here, which was our 52-week low. So at that time, on the one-day time frame, the NASDAQ was oversold for the only time in the last 12 months. You'll see a couple of other times where it got into the low 30s, and that's where we're approaching right now. So that's why I say I'm not sure we're done and bottomed out. It does look like we're starting to move towards a bottom, but there is some room left to go here on the RSI. So, again, this is one indicator. This would tend to indicate that we're heading towards a low, but we're not quite there yet. There's only been 2 times this has gotten to oversold. It does look like and feel like we're headed there again right now. So again, obviously not financial advice. I can't predict the future. I'm just showing you what this chart is telling us. So let's take a look at the Russell. Okay, this is the Russell 2000 on the 1 week time frame. So each one of these candles represents 1 week. And I want to show you that because the Russell has performed worse than all the other indexes. The Russell 2000 is supposed to be a broad representation of small cap stocks. This index has been hit harder than any of the other ones over the last few years. So you'll see that this peaked in November, and by January, we were already well past our 52-week lows. And since then, we're down substantially from there. So again, from the high in November until today, we're down about 27% on the Russell 2000. So this is acting very similarly to the NASDAQ. It's actually acting very similarly. Bitcoin is in this same area, although it's breaking out even a little worse to the downside. So I have a few lines on here that are potential price targets for the Russell 2000. There seemed to be a line of support back here between October and November of 2020. So that's a year and a half ago. So if I was to measure down to that line of support, it would seem like there's potentially maybe another 8% down that the Russell could have until it reaches this next line of support. And this really is the next line of support. So, and there's no telling that it's going to stop there. I just want to zoom out a little further and show you something else. So this thin green line right here is at about 1742. This goes back to August of 2018. This is 3.5 years ago. We are approaching this line. So if you had bought in at that point, you're basically even over the last 3.5 years. That is much worse than all the other indexes. So the Russell 2000 has taken a beating. We're just a few percentage points away from that. Now you'll see we've reached points far below that in the meantime. So there are lower lines of support than this. This is about 4 years of the weekly RSI, and we are now at 29.5 RSI on the 1 week time frame. So this has only happened twice in the last 4 years that we've gotten under 30. So again, this is starting to look like it's oversold. However, there still is some potential room to the bottom, and I want to look at this on the daily time frame. Okay, this is a switch over to the daily time frame. So you'll see again, this rarely gets below 30. It did so in January of 2022. It did so in December of 2021. And you have to go all the way back, I think back to March of 2020 again before that happens. But you'll see we are not there yet. We are at 32 right now. And when we looked at the chart, it looked like there was 7 or 8% room to the downside to our next line of support. So that's the overview read that I'm getting on the market. I think, this is another very bad day, and we've had a run of them. All the indexes are at their 52-week low, and I know a lot of people are probably feeling some severe panic right now. So I guess what I'm saying is if we zoom out and look, it does look like we are clearly in the middle of a downturn. We're in bear market territory already in the NASDAQ and the S&P 500, but it does look like potentially there's a little more pain to come. So I just wanted to show this is not the first time this has happened. We do see these dips over the course of time, and clearly we're in the middle of one. So I guess my advice would be the obvious. Everybody, please just be cautious and know that on a larger time frame, nothing's ever as good as it seems and nothing's ever as bad as it seems. So we are definitely in the middle of a very rough stretch. So again, this is not financial advice, but I can tell you I am not panic buying or panic selling. I did some light dollar cost averaging into my highest conviction plays, and I have another price target in mind, and I just showed you some of them. If we get to those numbers, I will probably dollar cost average in again. For me, that's the only way I know how to invest over the course of time because, I don't know anybody that can pick the bottom. I guess my biggest message is mostly you want to avoid making panic decisions. If you know your stocks and you've been through your stocks, you should know whether they're at a decent value. Almost everything on the list is down between 10 and 15%. And again, I tend to do small cap, high growth stuff. So I'll tell you all the Bitcoin miners are down between 10 and 15%. Pretty much all the EV stocks are down on the 10 to 15% frame. So I just want to conclude by saying, everybody be careful, choose wisely if you're buying, and try not to panic. I know today feels bad. So thanks so much for watching. That's what I got on my market update for the day today. So I appreciate you watching. If you made it this far, please remember to subscribe to the channel and smash the like button. So thank you so much, and hang in there.